So you could sort of sign up and suddenly find out that you have access to a line of credit of $300,000, for instance. But then if you decide to draw down on anything up to that $300,000, even if you decide to draw, on $5,000, for instance, that's when you would incur a cost, right? So you'd incur interest and you would be able to repay. And, Thinking Capital is very transparent in terms of what that cost is.
What would be the difference if you were to explain to a viewer in plain language, difference between a line of credit, a term loan, and a merchant cash advance?
A line of credit is really where you have access to a pool of funds that you can draw on at any given stage. So, for instance, what we offer at Thinking Capital is a line of credit. So you'd be able to sign up, get access to funds. Effectively, you'd be able to find out exactly how much you get access to. So you could sort of sign up and suddenly find out that you have access to a line of credit of $300,000, for instance, with no commitment. So there's no impact on your credit score. Once again, no impact on your credit history or credit rating. But then if you decide to draw down on anything up to that $300,000, even if you decide to draw, on $5,000, for instance, that's when you would incur a cost, right? So you'd incur interest and you would be able to repay. And, Thinking Capital is very transparent in terms of what that cost is. So you'd be able to decide whether or not you're happy with incurring that cost. So that's kind of a line of credit. And so it's effectively a pool of capital that you can use that's at your disposal to use as and when you wish. So that's kind of what we're offering. Then a merchant cash advance is more based on a sales volume. So this typically, it works well if you have a very regular cash flow. But if your cash flow is irregular, for instance, you're like a seasonal business, this is a bit more of a challenge because the lender would typically be taking percentage of your sales on a daily basis. So the repayment process is not really in your control. So that's kind of a little bit, maybe more of a risky product, some might say. It's also typically a more expensive product because obviously the lender is incurring more of a risk. This is a product that I think Capital used to offer. We actually moved away from that because we found that providing a business with full flexibility in terms of how they repay, when they repay, and how much they can access is far more convenient to our customer, to the small business owner. And then there's the working capital product. And, the Thinking Capital product is a kind of a hybrid line of credit working capital product. So your traditional working capital product is just a standard loan, like a fancy name for a business loan that you can use as working capital effectively, used to run your business for any business costs that you might have. And Thinking Capital has kind of rolled their working capital product into their line of credit product. So that basically means that, when you do sign up to Thinking Capital, we tell you in advance how much you would be able to access. So you sign up, it takes 5 minutes to sign up, and you would find out instantly how much you can borrow. And then whatever you draw down from that, I guess you could call it a line of credit, whatever you draw down from that is effectively a working capital loan that you can then use for whatever business costs you want to use it for.
That's very helpful. And in terms of a few things about, let's say, these types of credit products, line of credit, let's say specifically, that people don't often discuss that you think, is really important for the borrower to know?
I think I want to kind of really drive home one of the most important things, which is that there's no commitment required. There's no impact on signing up to Thinking Capital and getting access to the line of credit. So, once again, the sign-up process takes literally 5 minutes. No paperwork required. You don't need to speak with an advisor unless you want to. We have a great customer service team, but we know that a lot of business owners really kind of want to just kind of get on with it and be able to manage the process themselves. So, we're there to help. However, they can go through the application flow themselves. And as soon as they do sign up, they can see exactly how much they qualify for. And that process is totally free, right? There's no impact on the credit score. There's no impact on their credit history. So there's no negative impact at all on signing up to Thinking Capital, and there's no commitment required. So there's no reason why you as a small business owner shouldn't sign up right now and just find out, just out of interest, find out how much you would get access to today. And then if you then decide, based on how much you get access to, if you decide that you want to draw on some of those funds or all those funds, you then have the full flexibility to choose, how you draw it, when you repay it, and the term that you want to borrow it for. And only then, only when you then decide to draw on those funds, will you then incur obviously the commitment of having to repay that loan. So I guess the most important thing that I want to kind of really emphasize is the lack of need for any type of commitment when signing up to Thinking Capital, in order to just very simply find out of interest how much you could get access to right away.